Hello, everyone. Welcome to the Pathfinder Show, speaking to mind, body, and spirit to create the life that you want. I'm Toni Gorman, your host, and today's show is being brought to you by Equipped Transformers. Hello, welcome back. Today I am sitting with Michelle McElwain, and she is the broker and owner of Elite Homes and Estates. Welcome, Michelle.
Thank you.
And she has brought LaToya Harris with her. She is a loan officer with Fairway Independent Mortgage. And today we just want to have a conversation around home ownership, loans. We want to put you at ease on the process. So we've got two experts here today. Michelle, I have been looking at your website, so I want to tell you that I absolutely love it. I like the way you keep it refreshed, and you have new homes all the time, and you have tons of information. So first things first, what's trending today in real estate? Anything you want to share?
Well, definitely, I think the opinion in the DMV area is that it is a seller's market, very or record low inventory. So a great contrast from what we've seen over the last few years. So we still have some distressed homes in the market, but definitely an improvement in the DMV area for sure for sellers.
So you've brought LaToya here with you today. And I'm not accustomed to seeing a real estate agent with a loan officer. So is this a wise thing to do, to have someone that you work with regularly for your clients? How do you guys work together?
That's a great question, Toni. So one of the things that I would advise anyone who's embarking in either the home ownership or the home sale process is to gather your professionals, because your real estate practitioner is going to know everything that they need to know about your home and, like, you know, what you want to purchase, helping you to find the right property. But the process, a lot of people start online just looking at houses, and they see that, they get that look in there, oh my God, you know, I got to have that house, it's gorgeous. You know, you can go onto various websites and search. But if you have not consulted with a mortgage professional to find out how much buying power you have, oh my gosh, just like it's a pointless mission. So I encourage people to reach out to a mortgage professional. I partner not just with a single mortgage professional, but I look for mortgage professionals that have the same energy and support of their clients that I do. So LaToya is one of my trusted partners that's always providing information. So we start way in the beginning of the process.
So are you saying some of us sometimes we start the whole process backwards?
Yes.
Yeah, and I'm sure that's very frustrating to both of you. All right.
Yeah.
Because I think I'm one of those people who started the process backwards. But fortunately, I think that I was able to manage to get the property, but it took me much longer a period of time. So when I went to tell you guys what I did was I asked some questions of people that they really want to get some answers from you guys. So I'm going to start with you to give you an opportunity to share. So LaToya, it's the big credit question. Can you tell us about, how difficult is it if you don't have any credit? Not necessarily bad credit, but if you have a low score also. But if you don't have any credit, where do you start with that? What would you need that person to do so they can eventually own?
Just establish a credit line. It's really just that simple as them establishing enough credit where we can actually pull a score on them. So a lot of times buyers don't recognize when they go out. I'll get phone calls where a customer would ask me, what credit score do I need to have in order to purchase, and how much home can I purchase? And I'm just like, your credit score, what that does is it determines whether or not you can get the mortgage. How much debt you carry as a percentage of your income determines the amount. So for someone who's just starting off and establishing their credit, it's just a matter of, I need to establish history so I can see how do you pay your bills. But if you don't have a credit score, that says to me, I can't see how you pay your bills. Go out and get a credit card. Go out and get a vehicle. That way I can see how you pay.
Okay. And how long does that take to get a good score?
To get a good score, it's a matter of 30 to 60 days. I'm just
Wow.
waiting for it to be reported on your credit report and to show that you're using that credit card, especially for credit cards. I need to see that you're using it as revolving, because that's where the credit card is, as opposed to supplemental. A lot of times people will go out, they'll get a credit card, and they use it as supplemental income. Credit card's not supposed to supplement, it's supposed to revolve. Pay it off each month.
Absolutely.
So it's a
Okay.
matter of 30 to 60 days. Let it report and let me see that you're paying on it and you're paying it off.
Okay. So I know a lot of millennials, younger people, 18, 19, 20, 21, they don't think that they can own. So do you have to be a certain age to get a loan?
Absolutely not. I come back to credit score says whether or not you can get the mortgage, how much debt you carry as a percentage of your income determines the amount. So it's not about your age, it's about how much credit do you have and how much income do you have and how much of that income are you supplying towards debt.
Okay. So how do the two of you work together? Michelle, I'm looking for a house. I see this house online. I'm all excited about it, and I think I'm going to get it. And I come to you and say, I want this house. Can you help me to get it? What do you do, and then how do you eventually incorporate someone like LaToya?
Okay. Ultimately, I'm going to speak with you, get the information about the property that you're interested in. Sad to say, most websites are not up to date, so that house is probably already gone, but you've fallen in love with it. I'm going to now begin an educational process with you, find out where you are as far as if you've already contacted a lender. I usually suggest that you start with your credit union, your family member, your friends. If those people don't have a resource for you and you have not done your own research, then I have a resource kit that I use, and I also have individuals like LaToya who are standing right there, who are standing by to be able to assist my clients. So I've taken the time to build up resources. So when people think about a real estate professional, often they may just think, oh, just real estate agent lady, just show me this house. But actually, we come equipped with a lot more to be able to help you throughout the entire process, from beginning to end and even beyond the actual purchase and acquisition of the property. So that's one of the things I pride myself on, is being able to really help you understand the process and make it as stress-free as possible.
How are people receiving that? Are they comfortable with that? Because, I mean, there's some times when I'm like, look, I don't want the education. Just show me the house.
Right. And this is, I mean, and it's really is a personal choice. And I was just talking to a young lady the other day, and I told her, I said, you know what? There is the Target experience, the Walmart experience, or the Lord and Taylor experience.
Oh, good way of
When
putting
you
it.
walk into certain facilities, you are looking for a certain experience. So the experience that you'll have with me is not just a finger wagging education. This is not what I mean by education. There are lots of things that we may not know that we need to know about the home buying process. And my goal is to empower you, educate you, and to cause this process to be as stress-free as possible. And it can be stressful,
Okay, so
just by nature.
I contact you, I have a house, and then you want to start educating me. Bottom line, how soon can I see a house? I want to start looking now because I'm excited. So
You're excited about the process, but it really all depends on where you are in the process. So the education really isn't, like I said, not me sending you a 50-page manual, but even just letting you know that's awesome that you are looking to be a homeowner. That's the first piece I'm going to educate you on, being a homeowner versus being a renter. So that's awesome, great. Number two, so you need to know about buying power. So you've seen the house, you love the house, but have you taken the time to qualify? If you pick up the phone and you call that real estate agent who listed the property, they're going to say, yes, 1234 Bingo Street is available, and you'll get all excited, yay. And the next thing they're going to ask you is, do you have a qualification letter? Are you qualified? So not having the answer to that question could be a disaster for you.
so you're not going to show me the house?
You're not going to be able to see that house if you have not already done some pieces and put some things in order.
Okay.
That I don't want to harm you in taking you out to see this absolutely gorgeous home, and then we find out, oh my gosh.
So
we
how
can't
do you
afford
break
it.
that news to me in a comforting way?
Right.
Because I want to see it. How are you going to break it to me?
Well, I'm going to want to educate you. Again, the word is empower you.
Okay.
Even I want you to be empowered. I don't want you to go out and just look at a house. What good is looking at the house if you want to own the house? So I want you to be empowered to not just look at the house, but to actually own the house. So if your objective is to own the house, then you're going to relate to and download the information that I'm giving you so that you can be empowered to take the next step. You can pick up the phone, and I promise you, you will find 100 real estate agents that will jump right in the car and take you to go see that property. But have they really empowered you? Have they really served you well? Because now you're at a waste of time if you've gone out to see a property, or if I happen to know the property's overpriced, or if I happen to know anything about that property. There's all kinds of things that you're looking at, but you're looking at a picture, or you're looking at these pictures on the internet, and I may happen to know some things about that property. So if I'm just focusing on opening the door and just taking you to go see that house, I really haven't served you.
Okay, so you got me there, because if the house is overpriced, I want the agent to tell me. And I'm not saying I've had an agent to tell me that something is undervalued or anything like that, but that's good to know that you, and I'm sure there are other agents out there that would let you know that something is overpriced, because that would be really important to me. If you said that to me, that would get me. So you can use that line in the future. So I want to give you some of the questions, and you've answered a couple of them already. I know what I want to ask you guys. I've been looking at TV, and there's this commercial, and this is probably for you, LaToya, where they have these loans now where it seems to cut you out of the deal. I can just do it online, and then I get an instant response back. Can you unpack that for me? What is that? Is it legitimate?
I wouldn't want to go that route. In other words, when you're doing a rapid online application, you have no clue what you're signing up for. So, for example, I had a client who reached out to me recently, and she asked me. She said, "LaToya, I have this 20% down payment program where the lender's going to give me 20%, and all I have to do is move in." And I say to her, "Send me the estimate." So she sends me the estimate, and the 20% down payment was going to be waived. Well, not waived, it was a second lien on her property. So what that essentially means is you have 20% of the loan that she was not going to pay on for the first few years. Not only that, but she was also signing up for an adjustable rate mortgage. So what that means is if you have a 20% second lien on your property that you're not making mortgage payments on, you're not paying on the principal balance, which says to me you're walking into this property being upside down, and good luck trying to sell that in 5 to 10 years when you want to refinance out of this 20% bad loan that you just signed up for.
So that's important.
So when I think about those online applications and get pre-qualified, it makes me say, what are you signing up for?
Okay.
So it's important, like Michelle said, for a buyer to start with the finance process first. It's important to start there, even when it comes to the property being overpriced. Not only can it be overpriced in terms of value, but it could also be overpriced, meaning that buyer doesn't qualify for it. So you just went out and you looked at a property that's $20,000 higher than what you can actually qualify for. Why would you do that?
Makes sense. Makes perfect sense. So these are kind of things I've been hearing through the grapevine, so I'm just tossing it out to
It's
you.
good, it's good.
I've been hearing, there was a time if you were a first-time home buyer that you got some breaks on it, and after that, that's just it. But I've been hearing lately that if you haven't owned in like maybe
3 years.
is it 3 years? I was going to say longer than that. Then it kind of takes you back to that new home buyer stage. Tell us about that. I think that's great.
Okay, that actually, when I hear it, I like it, don't like it.
Oh boy.
I like it in the sense that you do count as a first-time home buyer again for certain down payment assistance programs. So, for example, in the state of Maryland, we have the Maryland Mortgage Program, where you have to be a first-time home buyer in order for you to qualify. In other words, you cannot have been listed on the deed for a property in the last 3 years. So, for example, let's say I have a customer who recently had a divorce, and they owned a property together. If they were on the deed, one spouse left the property, the other spouse still lives there, but they never sold the property. So both people are still listed on the deed. You don't qualify as the first-time home buyer anymore. So I'll have a buyer say, but I never went on mortgage. It doesn't matter. If you're on the deed, you've owned the property. So you don't qualify as a first-time home buyer if your name has been on the deed.
Oh, okay. So Not even after the 3 years has passed?
Not even after the 3. Now, if you sold the property and your name came off the deed, then you qualify as a first-time buyer, but
Okay.
you have to come off the deed. If your name is still on it, you wouldn't qualify.
So I'm hearing you say, as long as you've sold the property and obviously
Or-
your
or
name
we-
is off the deed, and then you're qualified. Okay, well, that's a little flexibility there. That can help. So is that popular now?
It is, but there's two different ways of looking at it. For a lot of the down payment assistance programs, as I mentioned, your name could not have been on the deed, but you still
3 years.
for 3 years. But if you purchased in the state of Maryland at all, you are not a first-time home buyer at all.
So it doesn't work in Maryland.
So no,
It depends on. It actually
Go ahead.
depends. It actually depends on the program. And I was just going to chime in, Latoya,
Yes, ma'am.
and just say that that you asked the question about the online mortgage company. That's the other thing. There are programs. People will mix and match information together. So you're hearing on the radio that there's $10,000 available for anyone who wants to buy a home in the state of Maryland, which is absolutely true. But then if you were watching a television commercial, you see all these little tiny asterisks behind because there are conditions. So what Latoya was explaining is some of the conditions under which you would go through those programs. So yes, you may be considered as a first-time home buyer, but only under this number of circumstances. So if you go online and you fill out some type of automated form, that form is really meant just to capture your data and to get a very quick snapshot of who you are. But again, if I go to Target, Target is not taking measurements. They're not asking me where I'm going for tonight. I can run into Target and just grab a dress if I want to wear a dress from there tonight. But if I were to walk into a Lord & Taylor and wanted to have an experience, when I walk into that boutique, when I walk into that department, where are you going this evening? They're going to ask me some questions that are going to help me
Very
make
good.
a
I
better,
like that. I like
informed
that.
decision. And that's what happens when you bring professionals and experts on board. They're going to help you make the best decision for your outcome and your goal of where you want to go.
Now, if I can add on to that, a
ahead.
true first-time home buyer in the state of Maryland was never on the deed to a property ever. That is a true first-time home buyer. And the benefit that they have is that they're not responsible for a percentage of the transfer and recordation taxes. Now, when it comes to that 3-year rule, that's more for your down payment assistance programs. So what those programs, such as the Maryland Mortgage Program, what they're saying to you is, because you have not owned any property in the last 3 years, we're going to give you assistance so you can have money to contribute towards either your down payment or your closing costs. They're two completely different things.
Okay, so give me a mortgage plan that is working for the average person that's I don't know, popular now, something that's really not too complicated, that's simple. Is there one in particular that you can speak on, or is that a good question to ask?
I do. As a matter of fact, for my lender, we recently introduced a program called Chenoa. In our Chenoa program, essentially what it is, it's a 100% loan.
Chenoa.
Chenoa, yes.
Chenoa. Does that mean something? What is Chenoa?
No, Chenoa is just the name of it's the name of our financer.
Okay.
So for this particular program, so essentially it's a 3.5% second. It's a soft second, which means it's completely forgiven after 3 years. For those that would qualify for the program, it will contribute the full down payment towards their transaction. So they wouldn't have to worry about the 3.5%. All they'd have to worry about is their closing costs.
Okay, okay. Just because I don't understand, I'm not a loan officer. When you say it'll be forgiven, what will be forgiven?
So they'll receive, typically on an FHA loan, because this is an FHA product, you would have 3.5% that must be paid out of pocket by the buyer. So that
Okay.
3.5%, that's their down payment. The mortgage that they're getting is 96.5% of the transaction. So if I purchase a $300,000 property,
Right.
3.5%, that's $10,500, has to come out of my own pocket, or it can be gifted to me. So my
Okay.
grandmother can give me the $10,500. The remaining 96.5%, that's going to be my loan. So essentially, in addition to me having that 96.5, which is my first mortgage, I have a second mortgage on the property, which is the $10,500.
Okay.
You with me? So that's my
Yes.
second lien. That second lien is going to be completely forgiven after 3 years.
Got
so I
that.
never have to pay it back.
Wow. And that's Chenoa.
It's Chenoa. It's specific to my lender.
Okay, now name your company again, say it real quick.
Fairway Independent Mortgage.
Fairway Independent Mortgage. Okay. All right, very good. I like that. That's something that I would definitely will be passing on. So now, Michelle, I want to ask you something about about the foreclosures and the short sales. How does that work? I mean, someone comes to you and we automatically think sometimes if it's a foreclosure, it's really going to be cheap, or a short sale, you know, it's going to be really quick. But I understand a short sale can be a process, but just talk about it in layman terms.
Good point. Layman's terms. The word short sale, Latoya's laughing. Short sale is a very misnomer. The short speaks to the money aspect of it. So if you can keep that in mind, you purchased a property in 2008, and in 2008 you paid $350,000 for the property. In today's market, which we've rebounded quite a bit, the current property value is only $250,000. That is where a short sale would come into play. Maybe there's been a divorce, maybe you have to relocate, whatever the case may be, and that property now goes on the market. It is short because the bank is receiving less money. Most of the time you'll go through a lengthy process of proving to the bank that you don't have the ability to repay. The bank has already established that the value of the property is less than what the original deed was. So you can usually work out that piece, but then there are all the pieces in between with the short sale. So there are a lot of moving parts. And most of the time when you talk about value, if the property is not distressed, which means physical condition of the property, then that value is not going to be too much different than a standard sale. And then for a buyer getting into a short sale process, you really don't know if the bank is going to approve the process. You're in a relationship with a third party that you don't even know. I mean, you and the seller, you guys have come to terms.
So when is it okay to do a short sale? I mean,
you have to have on your big girl or your big boy panties when you do a short sale, and you have to be willing to wait and hold out. And it's no longer representative in this region of a discount. Same thing with the foreclosure properties. The banks are now managing and controlling how that inventory is released. They've realized through seeing investors get properties very inexpensively that if they would just change their concept a little bit. So now when you have a property that has truly been foreclosed upon, the banks are hiring a preservation company to preserve it. There's a real estate agent that is put in place that is making sure that the grass is cut, the property is not in code violation. So you're not finding these dilapidated properties anymore. Some of these properties are in very good condition. Maybe they're missing appliances, maybe the carpet's messed up, but they are no longer representing like pennies on the dollar type of deal. So you may find a foreclosure property, or you may find what we would call a distressed property. You may find those out there, but it doesn't necessarily represent the best deal in the market for you.
All right. So to you, Latoya, I did a short sale successfully, or I've done a foreclosure. How does that affect my purchasing? Because that's going to be on my credit report.
Correct. So if you're the one who actually short sold your property versus purchased that property, it depends on the loan program that you're going with. So for example, if you are looking to purchase a property with an FHA mortgage, you have a 3-year minimum wait period. So that speaks back to the deed that I was talking about. You've gone through a separation. Both people who were on that deed have a 3-year wait period. Doesn't matter who was on the mortgage. Now it's who was on the deed.
Okay. All right, and there's another thing I want to ask about, and forgive me, I don't know the proper terminology, but I've been hearing that in certain states, if you want to buy but you're not ready to buy necessarily, and you can rent, and if you're in a certain school district, that the banks, the mortgage companies will help you to get into that property, and some of the money applies to a purchase down the road. Am I saying that right?
I can honestly say that's something that I'm not familiar with.
You're not familiar with that
touched
one? Have you heard of that, Michelle?
The only thing I can liken your statement to is maybe a rent with option to buy. And it also sounds like a hybrid of something, like specifically, we have programs here that are officer next door, teacher next door type of programs. Those again are two separate animals, so I couldn't speak to that specifically. But we do have programs within the DMV region that offer certain discounts to teachers that are working within their region. So it may be
and police officers and all that.
Yeah, officer next door, teacher next door. That program offers significant savings to officers and teachers who are willing to live in the community that they work in.
Okay, and I think I want to move on to something else, but I want to make sure I have the I've asked you the questions. Oh, I know. Someone really wants to know about the jumbo loan. I don't know anything about it, so I'm just going to say jumbo loan, and you can just answer.
So when it comes to a jumbo loan, there's a difference between a conforming and a jumbo or a high balance loan. When it comes to that, it's are you below or above 425,000? So essentially the difference is when you're below that price point, that means that you're going to have a lower interest rate because you don't carry as much risk to the lender. But when you exceed that dollar amount, you carry more risk, and for that reason you'll pay a higher interest rate.
Okay, very good. And I want to ask one more quick question, then I'm going to give you both an opportunity to share your information so folks can find you. A lot of people are renting now. How do you guys feel about that? Is that a way of building your score? What are your thoughts real quick, Michelle? And then yours, and then I'm going to have you to share about your business.
I mean, to me, renting definitely has to do with lifestyle. If you're in a lifestyle that doesn't lend itself well to you being in one place for a long period of time, such as military sometimes, they're moving quite a bit in the first few years, so that may be good for them. And if you have an opportunity, or if you're going to be in a place long term, you may consider ownership, because that ownership gives you something that's transferable and an opportunity to build wealth. So I always lean towards you should be owning.
Okay. Latoya, speak to it
Same
quickly.
deal. Renting versus owning. When you're renting, you don't have the tax benefit. When you own, you have a tax benefit. I often say to people, it doesn't matter how much income you make. I get that question all the time. It's not about your income. It's about how much debt do you carry as a percentage of your income. And if you can pay rent, you can afford a mortgage.
You're so right. You're right. All right. So Michelle, you are Elite Homes and Estates.
Yes.
So I want you to take a minute to share about your business and what you offer, whatever you care to share with the viewers. And then shortly after that, Latoya, you do the same. So take it away.
Well, with Elite Homes and Estates, what we offer our home buyers as well as home sellers is a stress-free, non-cookie cutter process towards owning a home or selling your home. When you're going through this process, you are probably spending more money than you will ever spend in your life. So we want that process to be customized and tailored to you. We spend time with you to find out what your needs are. And it's a one-on-one process, and there's no one-size-fits-all. So we offer all of the same services that you would hear with online advertising and marketing, but at the same time, we take the time to hold your hand and walk you through.
Thank you. Latoya, take it away.
Same deal. With Fairway Independent Mortgage, what we do is we hold your hand. We carry on the process, so we work hand in hand with your real estate agent, and we also work hand in hand with you, where we're communicating with you. We're not just saying to you, you're pre-qualified for. We're explaining to you why you're pre-qualified for the amount that you are, what you qualify for, and what your purchase power is. So great company to be with. Absolutely, you could pick up the phone anytime. We're not an online service where you can't speak with anyone. If you pick up the phone and you call me, you're going to get me on the phone. So Fairway Independent Mortgage, great company. All the loan products that are available to you, just give us a call.
All right. Thank you, Latoya. I appreciate your coming on today and joining Michelle. It really helped to bring clarity to the process, and a lot of questions were answered. Thank you so much. And Michelle, thank you. I appreciate you for coming on and sharing about what you do and how you do it, and you do a phenomenal job. And to Pathfinder audience, viewers, I think that if you take the time and to watch this slowly and a couple times, you will find the answers and the solution to what you're looking for. And also, you'll be able to contact two professionals that will hold your hand and that will walk you through the process so that you can have the home that you want. And again, back to pathfinding to create the life that you want. So thank you so very much for watching, and please feel free to contact me if you have any ideas or thoughts, things you want to hear about, or if you want an opportunity to come and chat on the show. Thank you again for watching. Until next time, Toni Gorman, your Pathfinder.